Good afternoon. This is Brad Dennis with BIS Commodities with your weekly wrap-up for the first week of November, ending November 4th. So far this week, or actually at the end of the week, we're looking at corn down about 7 cents, beans down about 20 cents when it's all said and done. Corn seems to be just kind of lagging between that 340 to 360 area. We went up there. We were in the higher 350s for most of the week, and then came back off. And just seems like the longs got a little stale up there at that 360 level and couldn't push through, couldn't get paid. So people took off some of their position, and actually open interest was down probably about 5,000-6,000 on the corn there. You're also looking at active harvest going on. There's no interruptions. A lot of corn is being piled up outside the elevators right now, so that's the quickest corn to get moved out of here. So there's a lot of selling going on, and whether it's extra bushels or not, there's a lot that's getting into the pipeline there. Over in the in the beans, like I said, down 20 cents for the week. CIF values continue to be a lot lower than their 5-year average. We're also seeing a little bit of a pullback or a risk-off type trade. So you've got one fund that has been long beans, taking some profits on it, and it's pulling the market back. You've got another fund that's looking at the technicals, and when you look at those January beans and you look at that 84 level, you see the 20-day and you see the 200-day moving average. There's been a lot of length added at that area. So you're pulling back because of profit taking. You're pulling back because of the risk-off trade. We saw that in crude oil this week as well. Crude's trading under 45 bucks a barrel right now. And there's just a tendency right now with the upcoming election, with the upcoming USDA report next Wednesday, to move to a more neutral stance. And maybe that's more it, the USDA report next week. This week we had private analysts, we had Informa, we had FC Stone coming out with yields that are above what the USDA is showing us right now. So if yields on Wednesday come out a little bit higher, ramping up that production number, traders right now are thinking that that higher production number will be much more than what the demand increase could be. And everybody's kind of looking at this corn market and the ethanol, corn used for ethanol right now. Pretty good numbers this week. Looks like we could boost up the corn demand for ethanol down the road. It might be a little too early to do that, but we could see that down the road, I think. And over in beans, once again, it's kind of surprising to see beans down 20 cents with such a robust demand picture. Export sales, although they're not delivered, there's sales on the books that can be canceled at some time, but very, very good numbers out there. So, yeah, we do have good demand, and that's what the bulls are feeding off of. But I think that this risk-off trade is more important right now, neutralizing positions before a USDA report and a U.S. election. Crude oil, same thing. A lot of people were long crude. We did break out on the downside after the Colonial fire. So middle week, we see this fire in a pipeline again. Everybody gets excited. RBOB flies up to the top side, but then we get EIA data, and we see that we increased our crude supply by 14 million barrels, and we're exporting the highest number of crude right now. So we still have a crude glut, and the prices are trying to reflect that to a certain extent now. Now there is still job owning with OPEC. OPEC's talking about cutting production, although Saudi Arabia came out and said, hey, you know what, we might ramp up production just because we don't like the place that Iran's at right now. So that job, OPEC never agrees on things, so I think you got crude up to that $50 area. Everybody took advantage of that, hedging up supplies. Now we're on the downward tailspin here. Got to see if 40 holds it, and it might not. Stocks also looking at giving up. I think they were down for 8 days in a row now. Part of that is the election that's coming up. New reveals about the Clinton party, Trump gaining ground, that has caused some people to move to the sidelines. The thought by the trade, whether it's right or wrong, is that Clinton gets in, we're steady as she goes. Trump gets in, it's a wild card, we don't know what to expect. The trade does not like surprises. So instead of being surprised, there's a lot of money being taken off the table right now and guys sitting on the sidelines. Currency trade. Dollar has pulled back. This week we had the FOMC meeting. They talked about not the time right now to hike rates, and actually in October we had 3 Fed governors that wanted to hike rates. This time we only had 2. So it's interesting that that number came down. I think that they're still looking towards that December meeting. I think that the market is at a point where show us if you can really do this or not. We've heard enough. We're not going to price it in. You do it and then we'll believe you. The Fed's been the boy who's cried wolf for quite some time here. This morning we had non-farm payrolls. Those came in at 161,000. The estimate was for 175. You know what? As long as you're over 150, you're creating jobs at a good clip, and it shouldn't really sway the Fed either way. So it really seems to me that in December now, to have any credibility at all, the Fed has to raise those rates. We'll see if that comes back into the factoring. I think when you look at that dollar index, though, you're probably a 96 low to a 99.20 high, and we're trading right around that 96.10 level. So downside might be supported now. We might have had as much correction to the downside as we need for this time. And lastly, into the livestock, higher cash this week. We saw some 105s trading out there, which was made a lot of the cattle guys feel good, although the futures couldn't follow through. And today we actually took out our weekly low and filled the gap that was created 2 weeks ago on October 24th. So from that perspective, you still got to have that demand coming in here, and we're just not seeing enough demand to have these guys come out and pay up for large amounts of cattle. Hopefully it's just a little bit of a pullback, but you really are looking at that 108, 109 area in December cattle as being very good resistance. So that's kind of a wrap-up of this last week. Next week, like I said, Tuesday, it's an election. Are we going to know who's president by the end of the day Tuesday? Who knows? Wednesday, we've got an S&D report for corn, beans, and wheat. We're looking at higher production numbers in corn and beans. We're also looking at a higher export number on the demand side of the bean balance sheet. I think that the production number will more than make up for that higher demand, whereas with corn, we might just see that yield bounced up a little bit and not a whole lot of other items changed on the balance sheet. So this is Brad Dennis with BIS Commodities, and a broadcast.